Hello everyone, and welcome back to Explain the Charts. Today, September 25th, 2025, we're zooming in on XAUUSD, gold, for an in-depth analysis combining the latest news with a deep dive into its price action. The precious metal has been making headlines, trading around new record highs, reflecting a complex market environment and strong investor interest. Recent reports indicate gold is currently benefiting from a palpable risk-averse market sentiment, largely driven by escalating geopolitical tensions. Concerns over heightened rhetoric between major global powers and recent drone strikes in the Middle East are powerfully underpinning gold's traditional safe haven status. However, Fed Chair Jerome Powell's cautious remarks this week, explicitly pushing back against expectations of aggressive policy easing, have undeniably bolstered the U.S. dollar. This strengthening greenback could act as a significant headwind, potentially capping gold's impressive appreciation in the immediate future. Despite this dollar strength, many traders still anticipate further 25 basis point rate cuts by the Fed in October and December, primarily due to a softening U.S. labor market. This dovish outlook for future cuts is expected to limit sustained USD gains and provide ongoing foundational support for gold prices. Let's now turn to the daily chart to grasp the broader context of these influential market dynamics over the past year. Examining the daily chart for XAUUSD, we can clearly visualize the formidable long-term bullish trend that has characterized the market since May 2024. Gold has demonstrated a remarkable upward trajectory, consistently carving out higher highs and higher lows. We observed prices comfortably breaching the $2,500 level by August 2024, signaling robust buying pressure. The momentum continued, propelling gold past the significant $3,000 psychological barrier by March 2025 with strong volumes. This sustained climb over multiple months is a testament to the persistent demand for safe haven assets amidst a backdrop of global economic and political uncertainties. The daily candles during these rallies often show large bullish bodies with relatively small wicks, indicating strong conviction from buyers. Notice the increased trading volume during key breakout periods, suggesting institutional participation and strong market interest. This prolonged appreciation underscores gold's reliability as a store of value, particularly when other asset classes exhibit higher risk. The overall market structure on this time frame remains undeniably bullish, guiding our current perspective. This enduring rally consistently validates gold's role as a primary safe haven asset, as frequently highlighted in market news. Now, let's zoom into the decisive price action during September 2025, pinpointing the catalyst for gold's latest record-breaking ascent. The daily chart reveals a powerful surge commencing around September 19th, accelerating sharply into September 22nd and 23rd. This aggressive breakout propelled XAUUSD significantly beyond $3,700, perfectly correlating with the news of the Federal Reserve's first interest rate cut of the year. Specifically, we saw gold's close at $3,747.66 on September 22nd, followed by an even higher close of $3,763.67 on September 23rd. This strong momentum, characterized by large green candles, clearly demonstrates that the Fed's dovish policy shift acted as a powerful fundamental driver for this recent leg up. The increase in volume during this period also confirms strong market participation in this upward move. This aligns directly with analysts' expectations that lower policy rates typically support non-yielding assets like precious metals by reducing their opportunity cost. It's a textbook example of how macroeconomic events translate directly into significant chart movements. Switching to the 1-hour chart and focusing on the period between September 8th and 10th, we uncover critical insights into intraday volatility and initial signs of potential overbought conditions. Notice the sharp jump on September 8th between 11 o'clock and 1400 hours Universal Time Coordinated, where gold surged over $40, from approximately $3,597 to $3,640, displaying immense bullish conviction. However, this rapid ascent was quickly followed by distinct periods of consolidation and minor pullbacks on September 9th and 10th. These smaller, more indecisive candles, often with longer upper wicks, suggest that buyers were facing increasing resistance and profit-taking began to emerge. The news explicitly cited the relative strength index at 68, indicating it was actively approaching overbought territory. This technical indicator, when high, typically foreshadows a potential short-term reversal or consolidation as the asset's price is considered unsustainably high in the immediate term. Such price behavior on the shorter timeframes provides crucial early warning signals for traders to adjust their strategies. It underscores the importance of monitoring momentum indicators even within a strong overarching trend. Now, let's transition to the 15-minute chart to gain a granular perspective on the actual peak on September 23rd and the subsequent sharp pullback. On September 23rd, XAUUSD made a concerted effort to retest the all-time peak, reaching an intraday high of $3,790.89 around 9:14 Universal Time Coordinated. The price struggled to break above this significant $3,790 to $3,800 resistance, forming an upper wick on the candle that signifies rejection. This failure to decisively push past $3,800 immediately triggered a rapid and forceful reversal, as predicted by the news. On September 24th, we witnessed sustained selling pressure throughout the day, with numerous red candles and expanded ranges. Prices plummeted from highs around $3,760 early in the day to closing near $3,742.88 by the end of the daily session. This abrupt and high-volume decline clearly confirms the pullback risks amid slowing momentum and emphatically signals potential bullish exhaustion in the very short term. This sharp retracement highlights how quickly market sentiment can shift when key resistance levels are tested and ultimately hold. Focusing on the latter half of September 24th on the 15-minute chart, as we approach the current time, we can delineate the immediate key levels for short-term trading. The price action shows gold establishing a consolidation range, largely trading between $3,730 and $3,745 after its recent decline. Immediate support is visually identifiable around the $3,730 to $3,735 area, characterized by several candles finding their lower bounds and rebounding from these levels. This suggests a cluster of buying interest that is preventing further immediate downside. Conversely, strong immediate resistance is currently observed near the $3,760 mark, where upward moves have consistently met selling pressure and been turned back. Traders should monitor these precise levels diligently, as a decisive break below $3,730, especially with increased volume, could signal an accelerated move towards the $3,700 psychological support. Conversely, a sustained rally and close above $3,760 could embolden buyers to reattempt the higher resistance levels discussed earlier. Observing how quickly the price responds to these levels will be crucial for agile trading decisions. Let's zoom back out to the daily chart for a comprehensive long-term outlook and to weigh the prevailing bullish and bearish arguments. On the bullish side, the primary drivers remain the persistent global geopolitical tensions, which consistently enhance gold's safe haven appeal. Coupled with this, the strong market expectations for forthcoming Federal Reserve rate cuts in the coming months will likely continue to suppress the US dollar's strength, thereby providing a significant tailwind for gold prices. Furthermore, sustained central bank demand for gold, particularly from emerging markets, remains a durable bid supporting higher prices. However, reasons to be bearish cannot be ignored. A robust rebound in the US dollar, especially if upcoming US economic data, like the critical PCE price index on Friday, significantly outperforms expectations, could exert considerable downward pressure. It's crucial to acknowledge the 2025 forecast from FX Street, which paints a more cautious, potentially bearish picture, indicating weakening bullish momentum. and placing key long-term support much lower at $2,530 to $2,500. This forecast also outlines substantial long-term resistance at $2,900, which is considerably below gold's current all-time highs, suggesting a potential for significant mean reversion or correction over the longer horizon. This apparent discrepancy highlights the difference between short-term reactive sentiment and longer-term fundamental shifts. Such a long-term bearish scenario, while seeming distant from today's highs, could realistically materialize if global tensions ease substantially, inflation proves more transient, or major central bank gold purchases begin to slow. Therefore, while the short-term outlook has been incredibly strong, prudence dictates acknowledging these contrasting long-term perspectives. To summarize our in-depth analysis, XAUUSD is currently consolidating around the $3,740 level after its powerful rally to new record highs. For short-term bullish continuation, key resistance levels to monitor are $3,760, then the formidable $3,790 prior peak, and finally $3,800 for a confirmed extension of the uptrend. Immediate support has formed around $3,730, which must hold to prevent further declines. Beneath that, the critical psychological level of $3,700 stands as a crucial battleground for buyers and sellers. A decisive break below $3,700, especially on increased selling volume, could trigger a cascading effect, driving prices towards $3,650 and potentially $3,610 to $3,600. Our unbiased short-term prediction suggests a bullish continuation towards $3,760 is moderately likely, with about a 60% probability, especially if geopolitical tensions persist and upcoming U.S. macroeconomic data, like the PCE, misses expectations. Conversely, a sustained rejection at $3,760, combined with stronger-than-expected U.S. data, could precipitate a deeper correction, with roughly a 40% probability, as the market digests recent gains and bullish momentum wanes. For long-term investors, remember the FX Street 2025 forecast highlights significant support at $2,500 and resistance at $2,900, implying considerable downside potential if the fundamental landscape shifts bearishly. Keep a very close watch on the impending U.S. Personal Consumption Expenditure Price Index on Friday, Federal Reserve official speeches, and any new geopolitical developments, as these will be paramount in signaling gold's next significant directional move. Thank you for joining Explain the Charts for this comprehensive XAUUSD update, and we wish you profitable trading.